if you are aware of Bunny, you're probably not aware of Timeless. But what we are working on over there is a yield market that allows people to come in and long and short yields. And what that ends up creating is a token that you can have boosted yield with no risk of liquidation and no expiration because it's just the organic yield. Um, but you're giving up partial access to it, and so you get this leverage position.
We are here on another episode of Blockswap Buzz. Today we have Dakotah from Bunny and Timeless. How are you doing, Dakotah?
Today it's very nice out. I can't complain. I love what I get to do work wise. So um, unfortunately, I didn't have enough Wi-Fi to be able to do this call from outside. But otherwise, I can't. There's nothing to complain about.
That's great. So just to kind of hop into it, um, so you're part of Bunny, this protocol, and you guys are sufficiently using a ton of bunny memes. Can you tell me about these? There's always like different characters of these bunnies all over the feed. Like, what's that?
Yeah. So that's actually kind of a something we're trying to hone in on what is our bunny. You might
Hmm.
actually end up seeing some marketing related to that as we uh, try to let the community decide what we want to do. But that is just our attempt to kind of play with words a little bit and poke around and have fun with it while we're deciding what the bunny should be and what makes that different from how you would expect a bunny to look. And we got to figure out how to get a unicorn showing a unicorn horn showing up in between ears on Midjourney. So if you're listening to this and you know how to do that, you let me know.
That's great. So, if you have a favorite bunny that you have so far, you can let us know and we can try to put it up on the screen here. Um, is there one in particular?
Yeah. So I'm a fan of brown bunnies, I think is what I've decided. If you look back at like our original Arbitrum post, there's actually two there, so it's a little bit hard to find. But yeah, like we want it to be cartoonish, but not terribly like if you let's make the cartoon as real as possible. I know that that's asking a lot, but a very realistic looking cartoon.
Yeah. So when was Bunny, when did it all start? And also, was there a relation to it being the year of the bunny currently?
Oh no, that was just a very nice like coincidence that ended up occurring. I tried to get everyone to really rally behind it, so there weren't as many memes created as I would have liked for the year of the bunny. But there were a few. So I'm glad you remembered that happened or paying attention to it. I don't know if that's something you celebrate at your if you're home or what. Anyway, so yeah, I Bunny got started, I guess I would say probably around November. Emissions didn't start rolling in until this year. So what we were actually trying to do is solve a problem we were having with Timeless. So for many of you who, if you are aware of Bunny, you're probably not aware of Timeless. But what we are working on over there is a yield market that allows people to come in and long and short yields. And what that ends up creating is a token that you can have boosted yield with no risk of liquidation and no expiration because it's just the organic yield. But you're giving up partial access to it, and so you get this leverage position.
Okay, so I guess I just want to make sure I'm clear on this. I wasn't fully across everything Timeless is doing. Is it sort of like a rate swap, or how does that work when somebody's trading against particular yields? And is that on like a LSD, LST type token, or what is this?
Yeah, so it can be any type of token. The yield correlated with Lido's. staked ETH was kind of an early one that we were using as a test. But at this point in time, we have factory set up with Aave Euler, and unfortunately I'm forgetting someone, but there's definitely three parties. Basically, though, it's all set up with ERC46 with the ERC4626 standard. So if you out there are producing yield and it's tied to the ERC4626 standard, we can probably work with it. There are a few small things like um, we have to be able to get access to it whenever we want. So if it's tied to something that has like some sort of locking mechanism, we'll have to work around that. But for the most part, it's designed to be permissionless and easy to use. As far as swap is concerned, it's probably best just to explain how it works. So like let's say Blockswap's yield is on there for your product, and you take the LSD, you drop it into the protocol. You're going to get back one perpetual yield token and one negative yield token. The perpetual yield token is going to have 100% of the yield. The negative yield token is just going to trade opposite of the perpetual yield token. They both need to equal one of the underlying whenever you go to, like, when you put both of them together, it needs to equal one whenever you go to exit. So the goal here is that it actually, it doesn't trade in a vacuum. So you might see an increase in yield for your specific vault, but that might not affect the pools. But over the long term, it should, because the yield's going up. So what ends up happening is when you sell the NYT to get that yield, you now have the same amount of equity in. How do I want to put this? You have the same amount of, you put in the same amount of collateral in, but you have taken out the NYT, which has some value because you need both to exit the trade. And yeah, it's there's a lot of work still needs to be done there. B2 is coming soon because just as you can see here, like you have to listen to an hour-long presentation to really understand how this thing works. So we're hopefully to simplify things, and we're really excited because, like I said, it's organic boosted yield without risk of liquidation, and no expiration. So you could theoretically, start holding this as a part of your treasury.
Interesting. So I guess I'm curious, since you had mentioned, Blockswap, and I know you're a little familiar, we have these different types of primitives. There's the derivative ETH, which can be tied to specific validators, but then there's also this KETH and KWrapped ETH, which are, basically taking all of the highest yielding validators and putting them into an index and making a new token out of that. So you can get like sort of this consistent yield, with the target rate of, let's just say it's 4 or 4.5%, somewhere there, and it's pretty targeted. So would it make sense for Timeless to have something with this stable rate, or would it be something you're looking for more variance in?
I think there's probably a case for both,
Hmm.
where we will find. I think we're expecting, though, the degen crowd to really like this product because for the PYT, the most it can actually do is double in value. The PYT can't trade below half of the half of the underlying. And of course, they can't trade worth more than 99.99% of the underlying, whereas the NYT is going to be the opposite. So if you bought the NYT at a tenth of the underlying, and then for whatever reason the PYT, if someone decided that they weren't worth as much and started selling those, you have a potential to get a 5x versus the PYT, which is only going to double max in value. But what that creates is a lot of leverage without risk of liquidation. So a volatile market is probably a more interesting product, but like I was mentioning before, with these, if you're going to hold it in your treasury, you probably don't want it to be as volatile. Like you want the boosted yield part with and yeah, less volatility. So probably both.
Okay, that's interesting. So there's a few terms that I think would be helpful to clarify. The PYT and NYT. What do those stand for? What do they look like?
Perpetual yield token,
Yeah.
the PYT, perpetual yield token. So you just with I think we're really trying to pay it like give an ode to the there's no expiration date.
Hmm.
One interesting thing, all four of the team members that are on Timeless and Bunny came from 88 MPH, where we had a fixed rate yield protocol, but we were constantly dealing with expirations. So being from that world, we know how hard that world is and how much value there actually is in something that doesn't expire that has a lot of these characteristics. So I think we're just trying to get that across. And then for the NYT, that just stands for negative yield token. Basically, you're gonna use that to short the yield rate.
Okay, interesting. So it sounds like there's kind of like this locked in sort of yield rate. And if you think that the yield rate's going to go down, you want the negative yield token. If you think it's going to go up, you want the positive yield token. Interesting. Okay. So we're talking about timeless, and that's great. So I know you're also part of Bunny. We've talked about that as well, but all of this is part of Redacted as well. So before we get into more details on Bunny, could you kind of explain the relationship to all these?
So Redacted is a partner of ours.
Hmm.
They really maintain our bribe markets is I think the term that they're still using at this point. Basically, what that is they have set up a market where they will let third parties come in and rent votes, and so you can come in and say, I'm trying to get VLET holders to vote for X, and normally that's going to be a pool. And why they would do that is because that can increase emissions, and we can go into we could talk for 2 hours about the whole strategy behind that. But yeah, they're basically a market that allows third parties to come in and rent VLET vote, which is a lot more efficient than putting up the funds, purchasing lit, and then locking it for an extended period of time.
Okay, so that makes sense to me, but can you maybe take everybody a step back and just very simply explain how Bunny works? Because I think that that'll help kind of build a foundation for the conversation moving forward.
Yeah, yeah. Okay. So what we do as a liquidity engine built on top of Uni V3 is offer LPs on our platform incentives for trade on top of trading fees. Holders of our governance token direct these emissions, this incentive. Um, think of us as a product similar to Curve or Balancer, but the DEX is Uni V3. And so an interesting feature that we have, compared to Curve and Balancers, that we actually have a larger boost. So what that means is that holders of our token are highly incentivized to once there's a gauge, they are highly incentivized to purchase that token because the incentives that they will actually get is up to a 5x multiple greater than someone who comes in without uh, the lit. So you know, and we have good incentives like a minimum of 20% APY is not unheard of on Bunny. Um, but what that means is that a VLIT holder could potentially be getting 100% APY for the same pool.
So, okay,
Um,
so just to make it very simple, feel free to correct me if I'm wrong here. It's kind of like the traditional yield farming, except the community can get a hold of your tokens and they can vote where the incentives go. So instead of saying,
exactly.
like arbitrarily saying, hey, these are going to get this amount, or that somebody's deciding which pools are going to get the incentives, this is community led, it's decentralized, it's up to the holders to decide.
100%, Derek. Yeah, our governance token reigns supreme in our community, which I'm sure you like to hear, man. The
Yeah.
block swap, what did I call it in our DMs? Dowishness
Oh
is on
yeah.
point. It's stuff.
Yes, have to support the Dowishness. Very open.
Hmm.
Okay, so we have this idea of what Bunny is. So this is really kind of there's traditional yield farming and DeFi, and it seems like you guys are kind of cranking it up a notch and adding this layer of decentralization, making it a little bit better. So are you guys, what else are you guys doing to kind of move this forward? Are you making it more efficient? You know, are there different models you want to sort of um, integrate? Like what's next for you since you already have this sort of DeFi yield farming. Now there's Bunny. Does it stop there or what's coming?
So, um, I think what the real future in Bunny will be based on what ends up coming from Uni v4 and the hooks. Uh, so I don't have a ton of information on what we're working on yet. We're kind of,
Hmm.
trying to work in darkness a little bit, but we're super excited for hooks. And I think most people are like I think if you talk to most people who are building inside the Uniswap space, they're going to tell you they're super excited. Um, for the utility that we already have, there's some more stuff we can unpack. We so the experience you're going to see as a user, besides this range, someone who's LPing is very similar to what you're going to get on Uniswap V3. So you go in, you deposit, you mint a receipt token, and you're good to go. What's happening behind the scenes, though, on Uniswap V3, when you mint an LP token, you actually get an ERC20, or sorry, an NFT, which is super cool. I like my NFTs. I like going on OpenSea and searching my other stuff, and then seeing my funds making money for me on Uniswap. That's all good. The process of making it though is actually less gas efficient than minting an ERC20. So when you do this on Bunny, especially for those using mainnet, you're going to get a better gas experience using Bunny, if nothing else. If you So we have several pools that don't receive any sort of emissions. Some of them are on mainnet, some of them are on other chains where we just don't have emissions yet. But there isn't um, there's plenty of utility and just gas savings on mainnet. After you get minted, though, another big benefit is that these ERC20s are composable. So we can, which I'm going to leak a little bit of alpha for you. There's information out there that we're doing it, but it's coming very, very soon that these tokens are going to be able to be used as collateral. There are 4 projects at this point that have expressed interest in doing this. So hopefully we're going to see some Bunny LP tokens get used, further downstream than Bunny, which will be a cool utility.
So I know this is alpha. I shouldn't push too hard, but I do have some questions around this. So to make sure I got the picture right, people they come in and they restake their unit swap three positions with Bunny, and Bunny has this ERC20 LP position, and this can then be reused as collateral on like a lending market. Is that sort of the idea?
Yep. If they if they accept it. So the first wave will probably be the projects that are really just focused on LP tokens. It's a little bit different of an experience from the protocol side that's hosting this with 2 different price feeds you have to manage. There is more risk involved with that, which led to us having to. We ended up creating our own oracle for this to manage these price feeds. I'm not even going to try to get into that too much, but everyone's super excited. I don't think I think this is a new concept to be able to use. I'm going to say Uniswap v3 LP to an LP position, but technically it's a Bunny position. liquidity just ends up in Uniswap v3. But this whole thing is a novel product all on its own, and it should be open source as well.
So really what you're doing is you're taking the Uniswap v3 position as this NFT, and then you're making a new primitive out of it, something that can be recomposed and reused in these other protocols. That's super exciting. I'm really curious to see where this ends up getting integrated and who's kind of on board with it, because I think a lot of people they're kind of from two camps. They can either do the yield farming or they can do this borrowing and trading. But you guys are saying, let's do them both at the same time. You can yield farm and then you can borrow against your position. So you can really start to stack up these yields.
Yeah, you're going to be able to get so what it's going to depend protocol and protocol but
Mhm.
in a perfect world, the protocol you decide to deposit into is going to give you the OLED emissions as well. So
Mhm.
you're going to be able to take advantage of the volumes on Uniswap. You're going to be able to take advantage of the emissions on Bunny, and you're going to be able to borrow against it.
Right. So this sounds super powerful. If somebody's using a token like KETH or some other yield bearing asset, they're yield bearing on the first level, and then they're also yield bearing on Uniswap, and they come to Bunny and yield bearing again, and then they can borrow against it, or leave it up for borrowing and um, essentially just get more and more and more and stack on top. This is cool. So um, this model, I know you said it's coming very soon. Um, it's that I think that's very exciting. So how efficient is something like this, or how does Bunny view efficiency? Is there is there some things that you guys are doing that maybe others aren't, or that you want to do with this new NFT thing that can basically make things a lot easier for people to interact?
Or from an efficiency standpoint, related to how well your funds are working for you?
Yeah, yeah,
Yeah, so at this point in time, the experience related to that is really just going to be that in which Uniswap v3 does, which probably in its own right is a little underrated. If you look back, especially for stable coins or products that need to be pegged to other things, anywhere where you can take advantage of concentrated liquidity. So Uh, for those listening who aren't super familiar with how this works, if you have a full range position, which if you go in and you're not picking a range, a lot of times it's just a full range position. That means your funds have to cover the price of practically zero to infinity. So your funds are getting spread out through everything. When you have a concentrated liquidity position, you can really hone in. And what this ends up creating is incredible efficiency. If you look at um, some of our pools, Frax was a very early partner for us. We created a pool with them, and I think at one point we were over 25% of the volumes that were, if you throw up the chart of we were basically all of the Uniswap volume at that point, but the chart of Frax on Curve versus Frax on Bunny, and we had like 25% of the volumes at one point in time with 100, 200x less uh, total value locked. So the efficiency is fairly large, but we can't really take too much credit for that. That's just uh, Uniswap doing its thing.
yeah. That makes sense. So I wanted to touch on that this idea of concentrated liquidity. Um, It sounds like you're talking from like the user perspective. That's super powerful. Is there an advantage to this from like a protocol perspective or somebody who's issuing a token where they'd want to sort of concentrate some liquidity?
Um, so if you're a project out there and you are trying to keep your peg I think you're going to want to be as efficient as you can be with it, which, we've kind of went through that whole model
Mhm.
of how that would work. You're really just creating this gigantic wall of liquidity in a certain range. So I think I mean, there at this point there are people whose job really it is to mold these liquidity walls in whatever way they want. But I've seen a few different strategies. The one that's probably the easiest to explain is kind of having the full range approach, and then using someone like Bunny to create a wall inside of that where you're trying to really keep your peg.
That's interesting. So I have kind of a few different questions here, and curious kind of like how you think stuff stacks up is like, are there any ways that people aren't currently using Bunny that you think they could use it? Or same thing with Timeless, where, I think there's a lot of, you see these carved out use cases with something and people tend to just follow that. But, there might be something within the future of DeFi where this can fit in. And I know you talked a lot about the UniV3 NFT, and rewrapping it. I'm curious if there's like other things that maybe people aren't doing. I know you said if you want to keep a peg or some sort of pegged asset, that's helpful, or if maybe somebody's trying to move the price of a token, whatever it might be. Um, I'm sure there's tons of different ways people can use it. That's the nature of DeFi primitives. So is there something like that where it can be used, or is there like a different future to DeFi that you're seeing can be developed around some of this stuff, even if it's not fully in place yet?
So I the fun stuff's going to come with hooks. I think
Yeah.
with Uni V4, I think we're
Mhm.
going to see a ton of innovation that comes. Like it's just going to unlock so many things. Um, Talking about us specifically, we really just like on V1. We really just focused on a permissionless experience. So we didn't want to get too crazy with what we allowed people to do. Uh, just so that we could make sure we stayed within the bounds of being trustless and permissionless. That being said, the one thing it's my job to go and educate people on is there are a ton of projects out there that are using and we could pick your name of a full range platform, but they have a concentrated like the perfect pair for a concentrated liquidity pair. Like if you're a stablecoin product and you're pegged with another stablecoin and you're on Sushi Swap, um, you're there are just ways for you to be more efficient with your funds. The other super easy way that we need to continue to educate people and onboard would be those who are using Uniswap V3 and not just collecting emissions on top of that. I mean, so there's some LPs out there that should be getting paid more. We could talk about the um, O token model, and we talked about renting for a moment. So there's that whole concept where there's a lot of efficiency to be saved. But as far as a DeFi primitive goes with our current setup, I
Mhm.
think it's pretty much being used in all the ways that it should be, or that
Oh,
I'm
that's
aware
great.
of.
That's great. So you mentioned this O token model. That's this options model, right? Like an option to purchase tokens. Can you talk through that a little bit?
I can. So what is happening there is our emissions are actually options to buy lit at a discount. There's been a little bit of a narrative forming around this concept. What it ends up looking like on our UI is you go in and you LP, you get paid in OLET. The first thing people normally ask is, okay, is that APY what I'm actually getting? Which it is, which is super cool. But you have to match it. So when you go to exit your position, or redeem for the OLET for lit, um, you have to provide ETH to whatever the discount is. So at this point in time, it's a 50% discount. and that's never been changed. So we'll just assume that that is what it is. So you've made $10,000 in OLED. You need to bring $10,000 worth of ETH with you to redeem for lit. A cool thing that we added to um, this model is that our options don't expire, and they are transferable. So we just got our wrapper layer, like a convex or aura that it is doing what they would do for their ecosystems, but on top of Bunny. And so you can actually just take that OLED now if you don't want to redeem, and you could just theoretically put it directly into Liquid.
So how does that work if options don't expire? Don't you always need to hold a certain amount of these tokens available for this person to to purchase? Wouldn't that be kind of the same? Especially if they can like transfer them around.
That is an interesting question. I don't really know what's happening behind the scenes, but I would assume and I'm sorry about that, Derek, but I'm
That's
assuming
not.
they're being minted at redemption.
Hmm.
Like I know the total circulating supply doesn't equal the amount that we could end up with. So our emissions calendar, I guess technically will always kind of lag unless there's some sort of big event redemption event. But yeah, I the way I think it works is that it's just minted upon redemption.
Okay, that makes sense. So it's just the more people who are using the platform, the more of these tokens will get passed around. Um, so okay, so it sounds like you've got a few different irons in the fire doing some different stuff. Like who are you looking to work with? If people want to reach out to you, like what types of protocols are you looking to have these conversations with right now?
Before we get to that, one more thing about the OLED concept.
Sure.
Um, a really cool part about that is that's a really profitable model for us. So, um, like I would say the last few epochs we've uh, rewarded our VLIT holders with $20,000 worth of ETH. That it's the APR is not the craziest thing ever, but 50% APR paid out in real yield from that, and that's 50%. So 50% of the ETH that you have to match lit with or your OLED with goes to the community, and 50% goes to the treasury. So it's just probably worth noting that we're actually collecting a significant amount of ETH in our treasury and rewarding our holders with a significant amount of ETH because of that model. On the like who our like target demographic is, I
Sorry, sorry. Since
uh,
we're going to finish up the OLED conversation, I was going to say that that actually does help paint the picture that this ETH is going towards the community, amazing Dawishness again, and then it goes to the company. So it completely makes sense that as people get these OLED and they purchase them, the result is that everybody else is happy about them getting some of the tokens as well. So that's a really cool concept. And now about who you're trying to work with. Yeah.
cool. Yeah, man. So somebody like Blockswap, of course. I mean that's why we got the introduction. And anyone, um, I ideally there are two. So the two
Hmm.
target demographics. The first one would be someone who wants a pair that's um pretty much pegged to another price because we can concentrate that liquidity into a smaller range,
Hmm.
and the LPs involved are just going to see it. We've seen it. There are Dune pages out there that I wish I could show, but they really have kind of you get 100 times the efficiency you're going to get if you have to do a full range. So anyone who is looking for a stable coin pair or some sort of stable pair, that is probably our number one target demographic. Like I don't am just my opinion, but I think that if you have a stable pair, you should probably use a full range as more of insurance versus like from a DAO perspective versus, and then have a concentrated pair somewhere like what, even if it's not us. I mean, it just you're going to be saving your LPs a lot of efficiency that way. The other uh, pro target demographic would be someone who's looking for an efficient way to bootstrap liquidity. I mean, we
Hmm.
are a liquidity engine. So what why I think we're good at that is because of this whole uh, renting model. So you can that the way you would have bootstrapped liquidity in the past, I guess, would be either the DAO itself or protocol itself puts up a bunch of ETH and their token or USDC and their token and puts it in a full range because if they lose range, like okay, now we got a problem. So they put it in a full range and that's the liquidity they start with. Or you go on to like a sushi swap and incentivize mercenaries to come in and provide liquidity for your pair and are most of the time going to be dumping one half whatever incentives you're giving it like that it's a business for them so they're
Hmm.
coming in and they're providing liquidity in exchange for whatever you're paying them and you're probably paying them and your governance token and it's going to send the price probably in a way you don't want. So what we have is a situation where you can kind of look at it as this model where you're giving someone. I mean, most times in life you have to. I like to say there's no such thing as a free lunch, but you're giving um, someone something for some token to provide liquidity for your project. But what you're actually doing, instead of giving it directly to the LP, you're going to give it to these VLIT voters, and they who maybe they LP, maybe they don't, but they're just voting for your pool in exchange for your bribe. So a lot of times what we're seeing is that it's a 2x multiplier. So or plus, we've seen it as high as 5x. Funny enough, but what that looks like is instead of say you had $1,000 that you wanted to use as mercenary funds to have liquidity providers come in. You go on to a DEX, you say that this is the pool and here's $1,000, please provide liquidity and it's going to be available for 6 months. And you just run through that funds and at the end you don't have anything. With Bunny, you go and you say, I want to send incentives to this pool. But now because of how this renting model works. And it's funny because we've seen it a few times. It works for Curve, it works for Balancer, and it's working for us where the you actually end up getting more incentives sent to your pool by paying someone to direct incentives to your pool than you would just giving them directly to liquidity providers. So whereas you might have $1,000 go directly to liquidity providers over here, on Bunny you can get 2,000, 3,000, $1,500, whatever it is. But we try to work pretty hard to make sure that you get a multiplier higher than what you would have if you just sent it directly to liquidity providers.
Yeah, that's really interesting, and I could see how that really gives some incentives for people to hold this lit token because they're going to get access directly to these user funds, and they get to control a little bit of where the liquidity, where it's going to go. So maybe they want to provide liquidity somewhere or another. So the question was, who are you trying to get in contact with, and who are you trying to chat with? So I guess the follow-up question would be, how would somebody get in touch with you if they think they're the right fit for Bunny?
Our Discord is
Hmm.
probably the best place. If you go on there, you will be hopefully someone's going to direct you to me if I don't catch it right away. Uh, so I would say our Discord. If you message us on Twitter, it's likely to be seen. But yeah, Discord's safe. Everyone, our whole community can see it there, and kind of like you guys, like we expect our community to help us push things forward. So they'll not only be there to direct you to me, but they'll probably be there to help you along the way.
That's great. So thanks, Dakota. Is there anything else that you want to add that maybe we missed today?
Yeah. So another cool thing that we're doing inside of our community right now is we've set aside some of our marketing budget to incentivize community members to help push us forward. So what this ends up looking like is pretty much just limited by your imagination. If you wanted to come in and help as a mod, or if you wanted to come in and help as a BD or help design memes, we're incentivizing inside our Discord. Once you end up collecting enough credits, you can get access to this NFT. There's only 125 of them. Last time I checked, there were like 70-ish left. But with those NFTs, you get access to our coordinate. And we have money inside of our marketing budget that we're just setting aside every epoch to let the community vote for who has provided value and deserves to be rewarded. So um, just as like a fun thing, like if you're trying to participate in Web3 and you're like, how do I get involved with this? Because that was me, 2 years ago or whatever. Like I had no idea. We've kind of created this small way for you to get your feet wet with uh, contributing.
So that's really great. The DAO is incredible. So basically anybody can come in and participate if they can provide value, they can be rewarded for that. So it's very much, it sounds very grassroots, community-led sort of protocol.
Absolutely. Yeah, we have a few Blockswap guys in there.
Yeah, great. Well, thank you so much for taking the time, Dakota. Really enjoyed chatting with you, getting to learn a bit more about Timeless and Bunny and everything you guys have done in the past and where you're moving it to in the future. It's very exciting.
Yeah, man. Same here. We're a big fan of what you guys are doing. Thank you for having me on.
Thanks. Bye.